Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording on Friday afternoon, September 1st. Barrie, it's September 1st.
What do you know?
Unbelievable. Here we are. My name is Ben Maldonado, and my partner here is Barrie Hederachi. How we doing, Barrie?
Doing pretty good. Summer's over. Getting ready for the busy season.
Yeah, and August was a busy month, as we talked about as we went into August. It wasn't going to be your normal sort of sleepy summer, end of summer month. There was a lot of activity.
Yeah.
And even the slumber fest that normally is Bitcoin lately has changed.
Yeah. Starting to kick a little bit.
Yes, it is. So we had that big move down. We did a little sideways. Talked about this last week. We needed to recapture that trend line and ultimately recapture this full square. And we failed. And now we've taken out the lows. So this looks like a better sell. The odds look like they favor we're going lower in Bitcoin. So I'd say, when you get your setups, fire away, because it looks like for whatever reason, Bitcoin is heading south these days. Anything for you to add there? It's pretty clear that back test failed, and now we're taking out the lows here.
Yeah, and we had a similar back test to a broken trend line in the ES, and we'll talk about that later when we get to it. Not much. I mean, after we took out those, after we took out the full square, we're back in, we're not in a strong position after we lost that. And I think last week we talked about how that move from April to June equals a move from like the June high to right now.
Yeah.
So because of that, until we take out that low right there, yeah.
Yep.
Once we take that out, I think that's going to be the main deciding thing for a few months. So
Which
up
is,
until
right near our
exactly.
half square.
Yeah, exactly. So long as we're bumping along on top of that, yeah, it could look weak, but we got to be a little bit careful, and it could snap back just like we did back in June. But that said, if that's quarter square or the half square goes, then I think we could get down to them new levels.
Yeah, I mean 20,000 is the next full square down.
Yeah.
So we'll see. And it's good to see the action coming back. Every week Barrie covers what we call the big five. He does ES, bonds, gold, copper, crude oil, and the dollar and the euro. So let's throw it over to you, Barrie, and dive in, because there was a lot of moving parts going on this week. It's the move back up into resistance, isn't it?
Right up in there. Yep. We left with 43.70 last week, right?
Yeah, that was one of the key levels. Yep.
And the whole idea was that, we really didn't leave that area prior to that. So we wanted to, that would be the sort of the deciding factor. And we talked about, on this wide bar, low bar, high or low of it getting taken out, I think, at that time. So we took it to the upside, and we talked about, hey, you guys better be ready, because it's going to be a quick run from that. We have 100. I remember specifically saying we have at least 100-point run left in this if we get moving to the upside, and a quick one, and we got that.
Yeah, because 44.75 was your next resistance.
So we got to that and went through it to 45.50, which was the level we were watching on the shorter time frames. Which, speaking of which, let me pull that out. So this area up here, this is a 30-minute chart for you guys. This is what we watch during the day, and we post on Twitter. All the Twitter stuff is in the description below. And if you're going to look at that, might as well remind you to click the likes and shares and subscribe if you like what we're doing, our work we're doing. Anyway, getting back to the 30. So this 45.50. We had a bracket here, 45, 45, 45, 54, and we've had this for a while, at least from the beginning, before the beginning of the month, I think, over a month. And when we got into this low, 43, 45 was a low back in middle of the month. We shot up, came back, higher low, had a little bit of a washout here, false break and all of that. Started to move higher, and once we cleared this 44.54 area, right here, you can see. And all these lines we've had before. And, it just generally started to move up. And the major resistance was really, and I think I even posted it Tuesday or Wednesday, we're looking at 45.50 area. And lo and behold, today we not just got there, but got there exactly on time. So we're squaring out 180 by 225 right around the open, and we sold off. So what else we had at this high was a false break, from the high from the day before. So here's a case of a higher high, false break, and we reverse immediately. And I think you mentioned that with one of the commodities. We'll talk about that later.
Yeah, exactly.
And, so here we have a very similar situation. I mean, the false break was like pretty obvious. Everybody it wasn't a little one, very obvious, and it went right up into the square. And we started trading lower. So that's what we were watching sort of on the micro scale. In the bigger picture, still, as long as we're above 44.75 now, the market is okay. It's in a stronger position than a weaker one. So moving into next week, a short week, Monday's off. So we'll be watching the market to see if this high that squared out on the 30-minute is going to do it. And we start to turn down. I mean, ideally, it would be nice to have it go up into the zone and fail. But failing any lower just means it's a little bit weaker. That's all it means. And so we'll be watching that next week. But 44.75 really is the key. And we're when we get into sort of corner spots and our resistance levels like 45.50 that we were talking about on the 30-minute, that's when you really start to watch a little bit closer. And I think next week we would be required to do that. Now, if we decide to come back down into 44.75 and test it and move higher, that's another story. And the whole thing would take at least 2 days, the whole event. And if we were to come down and then rally, that's definitely at least 4 days, if not more. So that should cover next week. The bottom line is anything above 44.75 is still bullish basis the daily chart. That's just how that's going to look. And if you guys are more interested in the short term, then I would say, we have this 4,500 is 50% of the square coming off the low on the 25th, what we call the spike low. So I would watch the 4,500 level. If that goes, then I would think things are going to get a little bit weaker. Otherwise, here's this 44.72 zone, which could really stretch out to 44.5 by the time next week rolls around, because time sort of takes a toll. And here's the 44.75. So everything's right in this area to watch. What are we watching? We're watching the counter trend to see where it holds. If it's going to hold above 44.75, then in that case, it's very bullish. If it doesn't, then we have to look at the lower levels and figure it out at that point. Now, this high squared out, just to give you a quick review, high squared out. Therefore, we were looking for a lower high to come in at some point on this counter trend. So we have the sell-off from the high counter trend. And it looks like we have a good one here. Not that a counter trend also has to square out on a daily because we don't have enough days, but it can certainly square out on a 30-minute. And often that's all it takes because price and time still balances. It's just on a different scale. So I would say we had that. And even on the 4 hour, we were up 45 by 60, I think, at this high. So we do have stuff at this high, and on the 4 hour that I just mentioned, we were squaring out 45 by 60. That's coming off of the low here, 18th. Okay. So we have stuff to call this the potential high for the counter trend.
And what are you using as your resistance for the week? That band in there, that 45.50 area?
You mean for next week?
Yeah.
Yeah, for sure. We're using this zone here. It's 45.50 basically. So until we can actually get on top of it, and stay on top. Here's a good example of it. Here's 4,500. If you look at this dashed line, let's say we're coming up through here, and I'm saying, listen, we have resistance up here. We want to get on top and stay on top. So here's a good example of that, right? We got on top, pulled back, support came in pretty much on the line. So that's what we call stay on top. And you can see right there, where the cross is, we went up, came back down again, stopped there, came back down again, stopped there. So you can see how we're making tiny higher and higher lows right through here, right? You can see that. So that's what we mean by hold above, take it out and come hold above. And once we can hold above, it's going to the next sort of the magnetic point, which is the full square. And it did do that eventually.
What's interesting is that it's set up for a tight band next week, 44.75 on the bottom and 45.50 on the top.
Yeah. You mean this band here, this white band?
Yeah.
We're definitely set up for that. But like you said, the time being what it is, I'm guessing we're probably going to get some movement. If August got us busy, I think September is probably going to continue. When does your cycle end? The
Rebel Yell? It's not until late October.
Late October, okay. So we're still in it.
We're in it. It's a long one, yeah.
Mm-hmm. So I would say it's going to be active, and I mean, let's see. After a counter trend, if it's really good, we shouldn't be going sideways. You know what I mean?
Mm-hmm.
And like you said, if we do, looks like if we're going to consolidate, then something else is setting up, and maybe even higher prices. So we have to really watch it. And that's why they say, not to, when a market makes highs and it gets really quiet, like here, like that's not a good time to sell them.
Right. That's right.
Is it not to sell quiet markets, right? So it's pretty much the same case here. So if we end up becoming having the market bracket in here, then we got to be a little bit careful because it might end up moving higher.
Mm-hmm.
But until that happens, we have to assume the counter trend high is in place and it came in at the right place because of the squares.
Right.
And treat it as such. So shorter time frames will help us sort of isolate that nicely. Basis daily, well, we always talk about taking out the low of the high bar. Well, the high bar was today.
Mm-hmm.
So taking out today's low, wherever it comes in by the time the close rolls around, that would be the one to watch. That would be the level to watch. We're recording before the close, so you can see the prices are still moving, and we'll have to watch today's close, and that would be another key for next week. And 45.75 would be the bigger one. I mean, we can pull back. So the idea being, if we get down to 44.75 and we hold somewhere above that and we reverse back to the upside, well, we're not finished necessarily, or it's not really at a weak position, right? Because momentum still retained fairly well.
Sure.
Yeah. Anything else you want to add?
No, that's it.
That's it, right? I mean, you can also draw a trend line in here. So we'll pick up that next week. So here's the weekly, which is a lot cleaner, a lot more interesting. So based on that, boy, we got the perfect counter trend. We're at the high, came down, inside
bar, one
bar up. Now, if you guys are really wanting to if you're really bearish and you want to confirm a good high, a long-term high, what you really want is you want the low of this week to be taken out.
Yep.
Right. I mean, that would confirm very high probability that this high is in place.
Mm-hmm.
And that would be this 44.33 area, right? If you take out 44.33,
yeah,
very close to the close of the week prior to this, the inside week bar here.
Mm-hmm.
So everything's pretty well set up. We had the 44.70 number right up in here, and then we have the weekly low, which is 44.33. So if you really want to confirm it, flipping, then 44.33 is the number. All right.
Yep.
Low of the high bar. And if you look at the weekly, you can see every time low of the high bar got taken out, we had a decent run worthy of a trade, and you were able to make some money. You can just study that on your own. It's just there.
It instead of anticipating the reversal, you get the actual reversal by taking that out. Yeah.
And you catch the part that actually starts to move, because right around the corner, I mean, look at today's high. If you look at the 4-minute, 30-minute near the high, it was just side chop, trying to scare everybody, right?
Yep.
But if you wait for it to sort of, the key thing to do is figure out that level where momentum breaks, to one side or the other. There's enough built up, enough velocity. So when you can find that level, that's when you can start trading. It's basically all that means is lower risk. That's all.
Yep.
Lower risk, faster earnings.
Now bonds had a beautiful reversal today.
Bonds were perfect today, and here's a classic example of taking out the low of the high bar. Right?
And then look at the selling that kicked in when that happened.
Yeah, exactly. And bond traders, they're not dumb. They watch the stuff.
Mm-hmm.
So if you want to study a good chart, go study bond charts, and you'll see how when low of a high bar gets taken out, how often that works out really well.
Mm-hmm.
Which reminds me, I should probably be doing that more often, checking the bonds.
Right.
So our outlook has not changed. We're still looking at all of this to be on the short side, and any kind of up move. We've been watching that, we've been calling these to be counter trends, which they have been, and they're continuing to go lower. And if we look at it,
that's a nice one
from the April high. Yeah.
Half
nice
square.
One.
Yeah.
Mm-hmm. So we didn't quite get up to the half, and this certainly didn't get up to the half. So I think lower prices can be expected. I don't think it's far off. And if we lose this, the low back in October, what it was, 117 or so, right? 1717.
Mm-hmm.
Well, we can get down to 112, which I remember came in from a couple of other directions. So bonds are basically good on the short side. What else can I say? Just be patient and take your shots, right?
And the implications of that are tremendous too for the rest of the market, because that means higher rates.
Mm-hmm. And what do you think? Well, maybe you can hit on that a little bit when you look at the commodities and why it's really important to watch these things closely at this point, not to get bored.
Yeah, right.
And so this is the weekly bonds. You can see, we've had a really good run, and now 114 is really sort of the first target coming in off the high in 2020. Getting there slowly. So we still have a little ways to go.
Mm-hmm.
Let's see how all that works out. For now, we'll just stay with the plan. And there is an expanding triangle working here. We bounced off, it went up again. Now, what can happen is if we take this line out at some point, that could be some kind of a climax. That could finish up the leg. So we could easily do it into 144. And if that happens, that's the time to really watch your shorts and maybe cover some. And it's a good place to do that. So we'll be watching that every week. And now you guys know where those levels are.
Mm-hmm.
The market that was hot this week.
Beautiful, right? Look at that pullback.
Beautiful.
I mean, this is what we talk about when the pullback, right? Staying on top of a support level and then reversing. And look at what happened after you reversed. Boom.
Yeah, and this is exactly like the 30-minute example that I was talking about earlier, right? We broke through the level, came back, and this is what we call stay above, right? It stayed above, consolidate a couple of days, and boom. And we were joking up here saying, hey, you guys, if you want to make some good money, here we go, $10,000 a point. $10,000
bucks a point.
$1,000 a point, And well, 83 was our resistance from before, so we did much better. We broke through it, which means 91 is probably going to be the next level, since we did build up a hell of a sort of a base here. Look at these highs, right under 83. We broke out. When we come back down to retest on counter trends, long as we hold above 83, this area, we can, we're bullish, right? I mean,
absolutely,
we're bullish the whole time. So,
and to confirm what you're saying, I'll talk briefly about crude, but just to jump in right now, weekly and monthly full square resistance is around 90, so that fits right with your 91.
Around 90, okay. Well, that's perfect.
Yep.
Good. Mm-hmm. And here's an ABCD that goes just a little higher, but that could be a false break of some sort.
Right.
I mean, if you look at these, right? These highs right there.
Right.
And these two.
Mm-hmm.
So we'll see. Anyway, I'll leave it on there. Just good for it's healthy habit. Yeah. So there you go. And if you guys want to catch what we talked about in April, May, June, I think it would be worthy for a study, because we were talking about to be patient, because after this is done, we're going to get a directional move, and it's going to be worth the wait we had to make here.
It is a perfect example of what happens when you have a big sideways base.
Yeah, and it worked out nicely.
The moves are really nice.
Mm-hmm. And here we go. Now we know why we're at critical levels, right?
Mm-hmm.
We can get above this 45, you guys, where crude's going to be in business for a while.
Yeah.
Because look how well we put this in, now, and look at this correction that held above all of that. Very super healthy, man. And we had 2 weeks down, let's just say 3 weeks, right? We had the high bar, 3 bars down, and in 1 bar we took out the highs. So this is a very strong start, and basis the weekly anyway. If we can break out about this 84, 85 area, really kind of the 83 on the daily that we were just talking about. We can sort of hold above that. Boy, that just really opens it up. Who knows what kind of news will drive this, period, the rest of the year and going into 2024, which I know is not going to be pretty. So I think it's going to be full of surprises, and we're getting an early glimpse of what that price action might be on the weekly, and we'll know when things are setting up as soon as we can settle about this box here.
That's right.
Sounds simplistic, but you'll see.
That's right. I mean, look at the example of your little green support box that you have there. Look at what happened when we settled.
We've had this for years, right? We had this, and
but look at the price action from this year where we couldn't get through, settled on top, and then it becomes a springboard.
Right, bought it up, and here's the first pullback, counter trend, and boom, right?
Yep, that's exactly right.
So the stuff works. You just have to be patient. Let the market show you, right?
And you have to trust it too, right? You have to spend the time, watch it work, and then you can trust it, because there's nothing easier for the people that want to take your money to do than to shake you out.
Oh my God. Yeah.
If you don't believe in the trade, they're going to shake you out.
Yep. That's just like the nature of the beast.
Yeah.
It's just a shaking machine.
For sure.
And that's all it does.
Yeah.
It just shake you. That's why you have to sort of have a sort of a Zen attitude and kind of be not so emotionally attached. You have to have a little bit of a distance, so you can kind of see what's happening on the chart, and not put too much of your narrative in there.
That's correct.
Anyway, so this all looks good. Let's move on to gold, which also had an interesting week. We went right up to our line, 3 days straight, bump, and really couldn't get over it. Now, really, if the
violently sideways, right?
Yeah, exactly. And look at this. But I was going to say, if we didn't have the square here, right? That these highs really wouldn't mean anything. It's just in the middle of somewhere,
right?
It's just middle of somewhere, right? It doesn't have any meaning.
But with your square, man, we know how important that is. That 90 is huge.
Yes, 90 is huge, and you can see we're kind of, so
winding up around
it. So clearly this 90 is the level to watch here for now. So that's that 1980 level. And so what happened last few days was we were in the box. We went up to the top of the box, banged up against it for 3 days, and we had some selling coming today. All right. We'll leave it at that. We're not all that excited right now where it is, because it's kind of in the middle.
Yeah.
The thing where price is wrapping around. So it's a little bit, it's not where you want to be getting positioned, at least in my mind. So we'll wait to see what happens here. If we're going to consolidate it further, or if we're going to break to the upside. If it breaks to the upside, sure, I think we can start trading the long side.
Sure.
And to the downside, if we take out 1940, we can probably look at it on this round, because we do have a couple of ABCs pointing to the downside. But other than that, not much. You're just watching.
Yeah, it's interesting. Gold, silver, and copper, all three on a weekly and monthly basis are in triangles.
Yeah.
They're all winding up for some massive move coming.
So gold weekly, again, we had that up bar. We had an up week coming off the 1919. We talked about it last week being support, remember? And there you go, guys, 1919. We took out the high of the week, and boom, there's your upside. And that's all we talked about. Moving on to copper. Again, we bumped up against 50%. I think we left off saying, probably going to go up and test the 50% line, which is the dashed line around 383. And we want to see it settle above that if it's going to go much higher. And it did settle above that for Friday. And so respect, let's see if we can maintain that. You know, with crude going higher, energy is going higher. We got copper moving up. We got the dollar moving up. Like you said, you know, and bonds are tanking.
Yep.
Something's happening. Can't ignore it.
Money is moving for sure.
Money is moving quietly. And, you know, this is one of those rare times when things are coupled, right? You know, we get decoupling and decoupling, and you can see how it's all sort of coupled at this point. Moving on to copper weekly. Well, here we are. We came down to test our lower fork. Worked out okay. Now we're up 3 weeks or 2 weeks without the low bar. We'll just leave it at that. It's okay. It might consolidate. Looking at the weekly, not much. You don't have something to do every day on a weekly, but 2 weeks ago we called out this low, and so that's still ringing out, right? Now, if we can hold above this 50%, that 383 we talked about, we're in better shape. If it slips under this at this point, it just means we're going to have to consolidate a little longer. That's all it means. Yep.
It's winding around that half square, just like gold's winding around the 90.
Yep, exactly. So here we have the dollar. Well, it's doing okay. We had a pullback and moved up strongly, very strong. And like we said, we're long the dollar. So let's just stay with that.
Yeah.
And the next resistance really is 105.75 area, 105.75, 106, let's say. And if you look at it from here, I think we looked at it last week. So we'd have a 36 almost, maybe by middle of next week. Again, if we can get above this, clear this, I think we open up the next square. So the level we really want to settle above would be, well, let's just call it today's high. Yeah, we can do that. I think we're in good shape. And
definitely showing strength.
It is showing strength for sure, and is trending. We caught that new trend, and it's still trending till it's not. And like you guys saw, even the 36 is a few days away, so it's got a little bit more to go. Not quite time to pull anything. And the weekly, hell of a turnaround. Look at that. We made a false break and took off.
Wow.
And confirming this down channel is done.
That's true, because it tested it.
Yeah, it's not. So whatever happens now, that move is up. And you can see like this, look at this huge impulse coming up, you know, after we saw that as a washout. So this, when we talk about, you know, fast moves coming off of false breaks, here's the washout, false break, and look at that, right? Look at that. And we talked about it on the day it came down, the next week and week after that.
And that's not some penny stock. That's the dollar.
No, man, it's the dollar.
So that's a
you guys are watching,
move.
you know, people that are watching our dollar work and everything else, you're pretty well off, right? Because all the dollar pairs you can trade with this. All right, what do we got left?
I think you got the euro.
Dollar, we talked about the dollar weekly. As far as levels go, I would say to watch the, you know, we want to obviously be above. I mean, this was kind of a big range. We stayed above that. So here, you know, as the bars get longer, you know, the ranges get wider naturally. But ideally for next week, I would say we want to hold above 103.5 or so. Okay, I'll just say that. So 103.5. If you can hold above that, then we're in pretty good shape. What else we got? We got the euro. Well, beautiful, beautiful, beautiful.
That's a perfect example of the pullback and fail at the square.
Yeah. So if you guys are been watching us for a while, you know how we look at these lines, and this is why, you know, like if I take the square away, there's nothing there. Absolutely nothing midair, right? And then you don't know if there's something there or not. If you just take the grid away, well, it's just 2 bars up, right? And he broke the trend line, fooled everybody.
That's true too.
And then it, you know, everybody's like, oh, I broke the trend line, it's going up. Not really. We had the 144 coming off the low. And we were talking about this, you know, we've been threading this story for a while. So, you know, we were talking about it here. We came down to 108, had some support. We were looking for it to have a counter trend below the 144, that would be around under 101, 110, 109 and a half or so. So we got that. So listen, this is the key level. The dollar is going to break, and then euro is going to break. For all of it to happen, I would say that if you guys are trading the euro, we want to watch the low of the 25th. We take that out. I think it opens up a lot to the downside. Simple enough.
Yes, sir.
Yep. So let's look at, and boy, you weren't kidding when you said things are going to move in August.
I know. It was a combination of the cycles and the things we had set up, man. It was not going to be boring.
Everything moved. Most everything moved. Most things moved compared to summer.
Yeah.
So here is the weekly euro, and we talked about this leg ending up here. I don't know if you guys remember. Every week we've been talking about it for a while, and following that, we were expecting. The whole point was that equal move normally ends the leg, and it looks like it did that, and so we are selling off, and I would expect it to sell off to continue, mainly because it's 110. Oh, here's the 110. Yeah, so the 110 base is weekly, right? So under that, market's weak to begin with, and we had this end up here, so everything's okay. We're definitely on the weaker side, and there's a little trend line to drop. Like I said on the other daily, if we take out that prior low, there it is. If they take out that low, it takes out that trend line, and everything just opens up. You see that?
Absolutely. Yep.
You're going to cover natural gas? Look at it.
Yep. Going to cover gas. Yep.
So we went to this nail biter and kind of crawled back up. Still basing.
Yep.
And we have the Hang Seng to take a quick look. We had a false break, looks like, off of that low, came right back up. So next week, it needs to hold above 1850 for it to retain any strength. We'll see how that works out. And look at that. We had a lot of this kissbacks, break and come back.
True.
I've been seeing a lot of stocks that were showing that. So here's another case. We had this trend line, broke it right there, came down. Here's the kiss, right? So now if we can't hold above 1850, which is 72 from the high,
watch out.
Yeah, watch out. I think that's probably going to go fulfill this and some other things. But a lot of, and it happened in the 30-minute too. I don't know if we looked at that. So it was this line right here. I probably had to make it thicker. Everybody can see it. Like really thicker.
Right.
But you can see if I stretch this out.
There's your back kiss.
Right. It was like that. And that was a channel, this line and this line up here. And you can see we broke it, came back, and it kissed right into a square.
That's the best.
That's the best, man. It doesn't happen all the time, but boy, when that happens, what do we always talk about? When that happens, lower risk, high reward.
That's correct.
That's the whole point. And yeah, that's what we got. I think that's enough for me. Let me put it back to you. We'll cover all the commodities.
Excellent. Great review.
All right. Thanks, Ben. Well, here's that pattern again. What I left off with, where you break the trend line to the upside just to fake everybody and then reverse.
Yep. At a key spot.
Right.
Yeah. I mean, we always talk about, getting on top and staying on top of the squares or failing at the square, right? So we made a low, shot up, higher low, and then this was the rally this past week. And we came into this square, and I always say, on Twitter or on these recordings with Barrie, we want to see and observe price action around these squares because it tells us a lot.
Right.
Well, what it's telling us here is this is pretty significant resistance, and this is a 15,570 is that full square level. We closed right on it yesterday. Looks like we're going to close below it today. There's still about a little less than an hour left, but unless we get a rally, this is generally considered a failure, right? Because we pushed above yesterday, closed on it, pushed above today. Looks like we're going to close below it, and especially if we next week, continue down and close underneath that trend line, then that is a false break.
Right.
So 15,570 is key. If the bulls are in charge and things are going to go higher, we're going to have to settle above that level. If we get stuck below it, the best case scenario would be, we grind away sideways and just burn off the cycle. The worst case scenario is, you got a lower high in place and you get a fast move. And you saw the last time we had a lower high here, pretty fast move came out of it.
Right.
So, I mean, otherwise that's the key. The harmonic balance point is a little bit below. So, like I said, the best case the bulls could do would be maybe if they just got trapped into this roughly eighth of a square and went sideways for a little bit. But as long as we're below that full square level, the market's vulnerable. Anything else to add here on NQs?
No, we're kind of watching the same scenario, right? Nothing's really changed.
No.
Yeah, we're good.
Okay. On the commodities side, mostly covering softs and energy today. The grains are correcting, still setting up, and as I mentioned during Barrie's segment, the metals, gold, silver, copper, they're all on triangles on various time frames. Oh, the other thing I wanted to show you, let me real quick show you something
Ben,
else.
just hold on 1 second. Where's the 15, hold on. Where do you have 15, 30, 35 or so?
15,035?
Yeah.
It's going to be down here around the half square.
Half square, okay.
Right in here.
So I was going to say, as long as we're above that half square, it's if we're going to consolidate, we can certainly consolidate above that. But taking that out would definitely put in a long-term high. Yeah.
Yeah, it would signal trouble. Also wanted to show you something on the weekly.
Oh, look at that.
Another reason why we ran into some trouble at the high this week. It basically came up to the half square and it's having issues there. So the picture, we know the level, right? It's the half square here on the weekly. And if we're looking at the daily, it's this full square around 15,570. We got to clear that for the bulls to make any hay. Otherwise, we're vulnerable.
Yeah.
All right, let's jump into the commodities. Here's one we haven't talked about in a little while, but man, did it act good this week. Sugar. So what I think we were doing in sugar is this whole move down was kind of like, if this was the third, right, the most powerful wave, and then this was your fourth, here we're working on the fifth, and it looks like we took off from this half square point. Look at the last 2 days, Barrie. Look at the lows. I love when a market does that, when it clears, goes above the square and then pulls back, and the low can't even push below the square. It's a sign of strength. And look where we closed the week, damn near the highs.
Yeah.
So sugar to me looks like it's going to push minimum to test that high in April, around 27. And if things really get going, the full square up around 28 3/4, 29 is certainly in play.
Right.
I don't have any qualms with how sugar is acting. Even on the sharp pullback, you can see it just acted right. Remember, this trend line here that it hit, this was drawn in March, April of this year. Connecting this low with this low. Came down to the trend line, bounced, pulled back, stayed on top of the half square, and then look at the move off that.
Yeah.
So sugar looks to be going to odds favor. It's going to make new highs. How high? I mean, we could start targeting using the higher time frames, once we break out. But the next test and the next important test is going to be up here around 2690, that old high. Any fly in the ointment you see here with sugar?
At this point, long as we can hold above like 24.5, I think we're slowly moving in the right direction. Right there. Yeah.
Right about there for you.
Yeah.
Which is the eighth square.
All counter trends holding above that. I think we're in good shape.
Yeah, it looks good. All right, let's go to one of the ones we've been talking about for a while that had a very good week. One of these big bases. Actually, let's go to crude oil first. And the reason I want to go to crude is because it's going to be very educational when we look at that versus these big bases that I want to talk about. The instructive thing here, Barrie gave a really good review of crude. The instructive thing here is we've been going sideways. Really, if you look at this, say this full square here, since November of last year, right? This is essentially a sideways movement within this full square. You got me? Is that clear? That's what we've been doing?
Yep.
Okay. So we tracked the low, right? We got this little false break here. We tracked into the low. We pushed up, higher low, tested the full square a couple weeks ago, had a pullback, and now we're taking off. The reason I think you're seeing this powerful move is this entire consolidation energy was building up. And it wasn't for a week. It wasn't for a month. It wasn't for a quarter. It was for a full 7, 8, 9 months. That matters, right? Because you have now, what do we have here with crude? If we close, we're about an hour away from the close, but if we close over this full square, which call it 85.16, if we close over that full square, we're sitting on top of 9, 10 months worth of price action.
Right.
That's power, right? That's like what do they call it? Ballistics, right? You had a big, sort of a big powder keg that you're using as your propellant.
Mm-hmm.
So to see this thing, and then I was also wanted to use this to show, what just a kind of a measured move would be. If we're looking at essentially a full square here that this consolidation was, and if we consider this square the breakout, let's say pull it back an eighth, because we were just an eighth short of the bottom of that square. 104, 104.80. It's a reasonable target for crude. Now, is it going to go there next week? Probably not. But over time, this is the consolidation area is roughly, we'd say 7/8 of a square. You add 7/8 to here, get you up in that 104, 105 area. It's a reasonable target. The next thing on a daily basis we got to watch is 96.34. I really like and the reason I wanted to show this, I know Barrie covered it, is the base is important. Having that big base matters because the breakouts aren't, a little, 5-point move, 3-point move, and then you got to get out. These are big potential moves. With that backdrop, let's go look at one of the candidates that we've been watching for a while with a very big base. Again, in this range since November, going sideways. Here's where we zeroed in on the low, and then we started watching pullbacks. We got a low, a high, higher low, higher high, another higher low, and now another higher high. This is a breakout. And this is, again, just let's do a measured move. Takes you up to the top of the full square here to 103 and change. Minimum.
Right.
Today we stopped at the half square, which is a reasonable place to stop, right? 90.30.
Mm-hmm.
Now, another thing to look at when you get these big bases is go to the weeklies and go to the monthlies. What do they show you? Break out of a huge triangle. If we look at the move up to the top of the square, again, 105. How about the monthly? This thing likes to triangulate too. Look at what it did after this triangle, right? Well, we just finished a even bigger triangle, a longer triangle, and the September bar is completely out. And we've already, on the first day of September, made a higher high on a monthly basis. So I think we've been patient. We've been watching it. We've been talking about it. I'm sure you've been bored because it hasn't really done a lot. This thing's coming alive. What else do you have to add here on cotton, Barrie?
We talked about cotton. I think I mentioned 86. So we're well above that now.
Mm-hmm.
And
86 right here.
Looks like we're pulling, I have a 90 degrees from the high coming up around 94. So that's really kind of my target next. Right there.
Mm-hmm.
Not real far, but that's the next big square. So if we can clear that, then we set up, that's when, it really opens up the next leg.
And the key thing
in the
is
sense of boxes, right? In the sense of squares.
correct. The key thing is big base, monthly, weekly breakouts. This is where you get the wind at your back.
Yeah.
All right, let's go to the next one. Our other big base candidate. Not quite breaking out yet like cotton, but man, this thing is ready to go. We've been talking about nat gas for a while. The interesting thing here, from the September 2022 high, the downtrend line has been broken. See, sometimes it's price that does it. Sometimes, in this case, it's more time than it is price. But we've broken that. We were pushing this week on that 282 level. Haven't been able to close over. It doesn't look like we're going to this week again. But the more we push on it, the more it's going to, weaken it and give way, and we're going to get that move coming out of here. So the nat gas is looking strong. The one thing I did want to show that I think is important, this is a weekly, right? So these are weekly bars, and the 267 level on a weekly has been really important, as you can see. Almost the entire week, we stayed above that. I think 262 was the low this week. But if you look at the history of the bars here, that's the first bar where the majority of the price action has been above that half square. So
yeah,
the thing we're watching is, okay, do we get follow through next week? Do we get another higher bar? Can we break out of this weekly triangle? And that may be the thing that kicks this thing off and gets it going. The targets here, very reasonable, nothing crazy. Half square here, 341, 342, and $4 on the full square. And if we get there, as always, when we get to one of these levels, we watch how price acts. Can it get on top? Does it get stuck below? How does it crisscross it, meaning we're going to get just chopped? So we'll watch it when we get there. But this thing, a lot like crude, a lot like cotton, has a very big base, basically from February of this year, January, February. So 6-7 month base here that we're going to eventually break out of. Anything else to add on nat gas, Barrie? I know you've been following this one too.
Well, it's slowly, it's starting to establish itself. If you take a look at the line coming from the April low, like the one you have there, it's holding. I mean, we can't argue with these things.
Nope.
And momentum wise, I think if we can hold above, let's say 230, 233, right in that range, we can hold above that. I think we're in decent shape altogether.
Yeah.
So
yeah, it's a matter of being there when the breakout happens, right? And that's what we're trying to do.
I'm sorry, not 233. I meant 265.
265, which is right up here.
Right there, yeah. If we can sort of manage that. Basically, what we need to do is break that square and get on top.
That's exactly right.
Right? Once we
that's the next task, and then after that, it's the next half, and then we go up to the full. But breaking this 282 level, as you can see, has been key for months and months and months. So getting on top of that will attract a lot of buyers and scramble any shorts that maybe are still shorting it.
Right.
All right, the last one I want to look at is one we've been talking about, and it's sort of been an odd one for us because it's a counter trend, right? It's against the main big trend. And Barrie and I were talking about cocoa last week, and he identified this really nice Gartley, and I wanted to update everyone and show you. Look at where the high ended up the last couple of days.
right on the
Gartley lines.
Yeah.
Right on those equilibrium lines that get generated off of this. So does this mean, let's go out and run out and short it, just like we didn't go run out and short it here? No. But what we're doing is we're going to watch this thing, because the first big test is going to be, can it stay on top of this full square in the 35.46 area? If it gets below that and gets stuck under it, then we look for, on the lower time frames, do we get a lower low and a lower high, and then we can fire away on this thing. Because this is I think it's a great example and a really good educational thing, which I want you to talk a little bit about, Barrie, is how you have a pattern and everything looks good, and then the market does something else, right? You always talk about this, and you and I always laugh, that the S&P always goes a little further than you think. You don't think it can go any lower, it goes a little bit lower. You don't think it can go any higher, it goes a little bit higher. This pattern, I think, is emblematic of that observation that we have, right? Because we had the false break here, we had a good fast move lower, but then it does one more ABC up, sweeps out any stops that were left up here for shorts, and now we close the week just below that previous high. So can you talk a little bit about that, about how, and I think this is a good topic for us to end on today, how do you deal with those instances, which happen often, that you and I have both experienced and observed, where you got the pattern, you got the corner, but there's one more pattern or there's one more push? Does it throw your analysis off, or how do you deal with that? And use the example of cocoa here, or you can grab the screen and show any chart you want.
No, we can go with that, what you have there. I mean, the basic idea is you really should know your patterns. I mean, markets is like anything else. I think the more you understand how the markets move, the better off you are, right? No question about it. So I think price pattern, market structure, and all of that should be like trading 101. And so without that foundation, I think it's very tricky. You can't just walk in off the streets and expect to just be trading like without a problem. And that's when all the news and everything else gets you, or your emotions and the psychology, right? So, but once you understand the patterns, so as far as what we're doing and what I do, it's, we have known ways the market finishes up a leg. So we look for those patterns to see if they're there at the right time. Let's just take it from the beginning. When do we expect a market to finish up a leg? Normally when price and time balances out. In our case, we use squares because it's very easy. And so when we get close to one of those things, we look to see, well, we have a square coming up. Do we have any other pattern to support that? And some of the favorite ones are ABCDs that ends the leg, or it could be a false break, or it could be a Gartley pattern. Let's just take those just for example, right? And so the first thing that would happen would be the square. Let's say it's a perfect square, and at this high that you have where you have the X, and then we have the false break. At that false break high, cocoa was 180 degrees up from the October low by
225. Yep.
225. Exactly.
Yep. It was at the high. And the weekly was 90 by 45. Monthly was 45 by 11. I mean, there were good squares there.
Well, there you go. That's why, right? That's why we are on this.
Right.
So when you have those squares, then you look to see, well, if the square is to work, we should usually, there's a high probability one of these patterns are going to show up. So first we look for the high to come in. Okay, well, the first pattern would be just a high, and we make a lower high and we're done, right? That would be the first scenario. But we look for the square, we look for the high to come in, then we look for a lower high. And if the lower high, before the lower high comes in, we have a false break, like in this case. And the false break would go above the squaring point. Otherwise, it wouldn't be a new high. So false breaks need a new high. And so there's your second possibility, right? So when you get a false break and we reverse, that's your second possibility. And if it looks good, that's all you have to work with. So you take the lowest probability, lowest risk point to get a leg into the trade. And that's that. Then you manage the trade from there. Now, if that somehow is not working and is not moving and you get stopped out, probably at break even in this case, because you had plenty of time to see what's happening, right? And that's why you always want to look at the lowest risk. And because then you'll have a chance to get in 2 or 3 times if you have to, no problem, because the resulting move would be, 5, 10 times that risk. So in this case, if the false break doesn't work out, in the lower next one, it would be the higher low, lower high here in this case, where point B came in, right? See that? So now all of these are still valid. Why? Because we had everything squared out at the high. So we're watching, and normally it doesn't go this far. Like this is like the last thing it could do is pull an extension like this in a Gartley,
right?
Finish it off. So the next point would be like point B, which would be the lower
high.
Lower high. So you try to find a spot there and enter into a short leg, at least get a leg in there because the risk is so low. Now, if that doesn't work out, so if B gets taken out, then you know the only thing that's left is a false break, another false break, and you look to see any other pattern is there. So in this case, we saw as soon as the B came in and the C didn't continue, automatically, as soon as the B gets taken out, we have a ABCD going up. And if ABCD is in there, then we have a Gartley. And that's really the last pattern I know. Now, well, there's one other one. If the Gartley fails, the only other one is maybe sometime in October, we get a third high. So that would be 3 drives to a high. Right. With less and less momentum supporting that. And that would be your 3 drives to a high, 3 drives to a low pattern. So there we talked about like 4 different ways you look for evidence of the market finishing up a leg following a price and time square. And you can, and it doesn't have to be a price and time square. You can find them in other places. But often, you know, when a Gartley works or any of these patterns work, there is a square from somewhere. It might not be the October low. It might be the March low in this case. Or it could be even from, you know, July low, or even that A, you know, from A to wherever it ends, it could be a square.
Actually, you know, from here, this ABCD on a 4-hour basis, it was 90 by 45.
Well, geez, there you go. So that's
I mean, again, another nice
there is your low risk entry.
That's correct.
Right? That is a very low risk entry, and you can afford to get in there and wait it out because you're up in so close to the high. And the pattern, and these kind of patterns where you get the squares on a weekly, daily, monthly basis on top of the pattern, price patterns, you don't get those that often. Maybe 3 a year if you're lucky. Normally maybe 1 or 2, if any, if that. So when you get them, it's surely worth playing that because the risk reward is so great. But that's how I look at it. You know, I look for the price and time, then I look to see which as the patterns come up, is it that one? Is it this one? Is it the other one? And we're not just blindly going for it. What we're doing is we look at it. We tried to find the least amount of risk to play in that, while keeping an eye on the other side. Like, you know, if this doesn't work out, what's next? You know,
that's right. Like, and the key thing you said is controlling your risk, right? When if you shorted it at B and B gets taken out, you get out. You get out, you step aside, you reassess.
Exactly. You don't put your stop like at 37.50.
Right. No.
You know? Yeah, exactly. You step aside, because especially if you drop into like a short time frames like you do, like 4 hour, man, you know, your risk is so minuscule compared to the monster legs that you get out of these big patterns, especially weekly, monthly patterns that come out. So
absolutely. I thought it was important to bring up Coco because I had talked about it, because one of the key things in trading is how do you manage your risk? How do you minimize your losses? Because there's going to be losses, right? You're going to be wrong. The patterns are going to fail, and you're going to have to manage the risk. And this is a perfect example of how the initial thesis didn't work, but you get out and then you reassess and you keep analyzing and you keep looking at it and you say, okay, what else is it doing? It's not doing what I originally thought. And Barrie walked through 4 different patterns that could be happening. Well, we know one's not. Now we're looking at the next one. We're saying, okay, there's a square there. The Gartley pattern finished perfectly on the equilibrium line. Okay, here's another setup. Can we get in again with a favorable risk reward? And it may take you 2 times, 3 times to get in there. But if you're minimizing the risk, as he said, when you catch the correct pattern and it plays out, you're talking about 10x or more in terms of return.
Right.
And that's the idea.
And
Barrie, go ahead.
I was just going to say, let's say if this is not excuse me, if this is not the right pattern and it's 3 drives to a high, then you still get a chance, because for 3 drives to work, this would have to come down, either stop at B or maybe a little lower, or in between B and C, it would be the proper place for it to pull back into before it runs up again. So that gives you a chance to, at least to get break even, maybe even cover some, and really, really thin out your risk.
Correct.
So if the third one comes, well, great. It's just a very low risk trade getting back in there again.
That's right. Barrie, the other topic that came up this week that maybe you could briefly touch on, and I'll give you the screen. Someone was talking about setting squares and where do you set it, and also about squaring the chart. I sent him a little tutorial on how to square the chart, why you have to have a squared chart for these squares to work. Do you want to quickly, like 5 minutes or less, run through like how you set up a square, like where you set your square and how you play with it to find your spot?
Sure, I can do that.
So I think that would be helpful.
Yeah. Actually, we should really, honestly,
do a whole video.
Yeah, we really, really should do that.
Just give them a taste. We'll just do it a couple minutes.
Yeah, and we'll do it. We'll do one. We've been talking about it for a year now, so
right.
It's about time. I think, I feel almost bad sometimes because we talk about all this, but then there are a lot of questions out there how to do it.
Sure.
Well, Hansing might not be the best place to start because of large numbers. Well, let's take a look at this. Well, first thing is, let me take out any kind of formatting. So I'm just taking the working chart and I'm taking out the squaring, right? And if I do that, that's what it looks like. It just looks like a normal chart that you'd be looking at. So here, the market, it's automatically adjusting based on the high and low and the spacing you have. It really has no sense. And if you squeeze and expand the chart, everything will move. It wouldn't stay still. And if you square the chart, what happens is, the proportions will stay the same. One of the benefits is it's easier to see patterns because your eyes are always looking at the same scale. Your eye doesn't have to adjust to different scales just because of the price of the computer screen or the amount of zoom you have. So that's a nice thing. So, if you couple the scale with the squares, then I think it's much easier to interpret patterns and structure because you have a much better handle. You have a better handle on looking at those things. So how do we set the square? Square is basically set by price and time, and this software we're using, Wave 59, has a very easy interface. So in this case, it's how many units of price per time. Okay. So in this case, and you can put 1 by 1 will be 1 unit of price to 1 unit of time, and a unit could be, easiest thing would be to think in terms of $1 per day, right?
Right.
That'll be 1 by 1 for 1. So here it says 2 by 4. It's really the same as 1 by 2. I just have it there. So other reasons. So once you set that up, once you have the scale, how do you know it's the correct scale? How could it be? I mean, another question that comes up is, well, how do you know it's not 1 by 2 and it's not 1 by 4, 1 by 8? Gann talked about all those numbers being important. Well, the way you know is if you scale really, unless you get into really weird numbers, like let's say the 4x, even the 4x, if you get, Gann talks about 2, 4, 8, 16. Well, all of those, if you scale them, you're going to get the same results because it's the same scale. You're just doubling things. So if you do a 1 by 2 or 2 by 4, it's the same thing once you scale the square to fit the chart that you're using. So in this case, we have 1 by 2 there. And if you go to the chart square, in this case, I'm scaling it to have 8 points per bar. So 8, that's what it comes down to, 8 points per bar. And the example I talked about earlier where this is the daily. Earlier I said, let's pretend it's a stock that's $1 per day. So here it would be, think of it as $8 per day. But in this case, measuring unit can be anything. It could be dollars. It could be whatever the measuring you want, but you want to get it into degrees. So by multiplying it by that number, what we get is we convert everything to price and time into degrees. So it's much easier. They're very easy to work with. Okay. Is that clear enough? Just for a quick run. Okay. So once we get price and time scaled, like I said, how do you know what the good right scale is? Well, if I put 16 by 1 here, this is going to go way out of whack. Okay. And if I go, so either way, if you go too extreme, you won't be able to see the chart, or it'll be so tiny, all the bars will be within a 1 inch.
Right. Right.
So you have to get into something reasonable that you can work with, like here. And once you get that, you don't have to worry that's the correct one. A lot of Gann people have this big headache about, oh my God, and how do you know this is the right one? Well, if you scale the chart first and then you scale your square to match that, you're okay. You're gonna catch all the same degrees of movement because they're all related if you use the scale of 2, 4, 8, 16, 32, 64, right?
And Barrie, just to explain, your chart is 2 by 4, which is 8. And your square is 8, and that's how you match the two up, correct?
Exactly.
Yeah.
So you want to match it. So that's, so you whatever you set up the chart with is
set
what
up your
want.
square.
Yeah, exactly. Once you do that,
make sure they match.
Make sure they match, and then okay. So that's the basics. We set up the chart first. Like I said, use 2, 4, 8, 16 scales and see which scale seems to work. And you can play with it a little bit. You can do a little playing, use 1 by 1 first, maybe then use 2 by 1, or try different scales to see. But once you find the one that works, then you can start testing. So the best way to learn this is to really try different
play around with it.
Yeah, find one market, one stock, and then play with the scale, play with the squares, and see how it looks, and see what you catch. And once you start to do that, you'll get a good feel for it. Like anything else, you have to learn driving. It's a little bit like that. And once you do that, then you can go into different types of squares, right? So a square of 90 and 72 are like a couple of the basic ones. So if you put the 90, you can see this has been really moving in the 90s, right? Because the 90 came up to here. You can see the 50% held here, 50% again at the resistance now. So you can see once you start putting up charts with some experience, you'll be able to see which square the market is working with. Is it square 60, 72, 90? So, and a lot of the times it might be a little bit of a blend of the two. Like 72, square 144, for example, catches most others. It catches most other squares because they're all there. It's a division within. And so if you use 144 with all the divisions in there, you'll catch the 90s and everything else. And that's just easy to do. Yeah, to see which squares to use to square out, that's just experience. I would say like midweek this week, I went from 144 to 90, I think, on the 30 minutes. So that's a good example of where you and you're studying the charts, and all of a sudden you're like, oh, you know what? It switched this way. So here's the 30 minute, and all the way up to Thursday, I've been using the square 144 for a while now, maybe a couple of months even. And then once we were up in here, I saw some of the patterns, and it seems like we're switching, and I wanted to see, and I switched it yesterday, and sure enough, today we perfectly squared out 180. So those kinds of things you can't really teach. It's a little bit of sense of knowing where to place things and look at things. And somebody else actually said, if you put it on here, there's another square setting up. So there are different squares. It's not that you have to.
It's not that there's one right answer.
Yeah, it's not about the square itself. It's really about understanding how price moves through the square.
And framing the price action.
Right, exactly. It's about framing and being able to see the market structure through the template of the square. And you get the template ready by squaring everything properly, and then you use the correct square, looking at how it's moving through that square.
Well, Barrie, we're going to have to do a full show on it. We can do at least an hour on this this topic. So I think I just wanted to touch on it here today, but how about we commit to doing something in September? How does that sound to you?
That sounds good.
Okay. Yeah, so we'll do a video on the squares and to help answer people's questions. In the meanwhile, listen, everybody, have a great Labor Day weekend. Enjoy the extra day, rest up, because it's setting up that September is going to be just as busy as August. And you can see it in the charts. We can see it in the patterns. We can see it in the cycle. So And that's not a bad thing. That's for traders. We want volatility. We want movement, and it looks like September's going to bring all of that and more to us. So, Barrie, have a great weekend, and we'll talk next week.
All right. Good job, Ben. Thanks. Everybody have a good weekend.
All right. Take care.
Bye-bye.
Bye.